makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, oil at a wartime high. The U.S. is reportedly eyeing new military operations in Iran. The Bank of England and the ECB decisions later today after the Fed held. Now, we break it all down in just a moment with Sören Radde from Point 72 and Iain Stealey from JPMorgan Asset Management. But first, we begin with U.S. big tech earnings as well. Amazon and Alphabet's Google are seeing a clear payoff from their AI spending, with Meta lagging behind.
We are increasing our infrastructure CapEx forecast for this year. Most of that is due to higher component costs, particularly memory pricing. But every sign that we're seeing in our own work and across the industry gives us confidence in this investment. That said, we are very focused on increasing the efficiency of our investments.
Our ability to invest in this moment and stay at the frontier I think puts us in a strong position. And I think we are doing it based on tangible demand signals we are seeing.
Well, let's get more now from Bloomberg senior strategist Neil Campling. Neil, good morning. What have we actually learned about how much the Mag 7 investment in AI is actually paying off?
Good morning. I think if we have a look at the growth rates of the businesses, that gives us an indication of whether these investments pay off. And quite simply, Google Cloud grew 60% year on year in the latest quarter. And their backlog, in terms of revenues that haven't even been posted yet, grew 100%. So I think that is an evidence that they are getting good returns on those investments. In contrast to that, we have Meta's sales at half of that kind of growth rate, whereas their CapEx is growing at around 3 to 4 times the rate of growth of their actual sales. The other companies in this space, of course, with the big 4 hyperscalers, are enjoying accelerating growth. Azure grew 38% for Microsoft in the latest quarter, a very good number for a very large installed base. And AWS enjoyed its fastest growth in 4 years, growing 28%. So I think we've got 3 out of the 4 companies that are enjoying very good top-line results on the back of the investment, whereas really there are lots of questions being asked around Meta in particular, because the rate of growth that they have in terms of their CapEx is absolutely very significant. Yeah. We're looking at over 100% growth year on year for their CapEx.
So, Neil, what can we expect actually from Apple's results a little bit later?
Yeah, from Apple, of course, we've got some of the new products in terms of sort of the lower end, cheaper MacBooks coming out. We're going to have, I think one thing we're going to look at is what are the impacts of the increasing component costs. We've discussed before about memory pricing, and we've seen a 45-fold increase in Samsung's memory division profit this morning. So does that start to impact in terms of the profitability from Apple tonight or going forward in the guidance? It was the guidance last quarter that worried some people that component costs were going to start impacting whether consumer demand for raising pricing or whether it impacts those super normal margins that Apple really enjoys.
But thank you so much, Neil. As ever, Bloomberg senior strategist there, Neil Campling. Now, the Bank of England and the European Central Bank are expected to keep rates on hold today. Meanwhile, the latest data shows France's economy failed to grow while prices jumped more than expected. Now, with us now, Sören Radde, head of European Economic Research at Point 72, and Iain Stealey, International Chief Investment Officer for Fixed Income at JPMorgan Asset Management. So thank you both for joining us. Iain, let's start with you. When you look at, this is about military options, actually. We worry about the price of oil and therefore inflation. So I don't know how much central banks can actually guide us into what happens next. You have to be a military strategist to try and understand this.
Central banks are in a really tough spot at the moment, and ultimately they're looking at an environment where, yes, prices are going up, they're too high, particularly in Europe, where we know the ECB has the single mandate of price stability, and the Bank of England sort of has that same mandate, although maybe looks a little bit more at the economy as well, rather than more than the ECB does. But they're both very fixated on this, and they want to make sure that what they do is seen to be inflation hawks. They seem to be under control. Long-term inflation expectations can't become unanchored. So that has to be their priority. But I do think that they're going to be measured in their response, because ultimately this is also a tax on consumers and is likely to have a growth impact down the line.
Yeah, and Sören, I mean, again, the problem is with the headline saying, look, you know, the U.S. is mulling some options, military options in Iran. Again, you don't know what happens to the price of oil. You don't know what kind of impact it has longer term, so you don't know whether central banks should look through it or not.
Absolutely, and I think that's precisely why the message that we got in the weeks leading up to the meeting today, especially from the ECB, was there's a high option value of waiting to ascertain which scenario among the ones they laid out we're in. Are we in a prolonged closure of the Strait of Hormuz scenario? Are we in a high oil spike scenario? Or are things settling down?
But so who can tell us? And again, if you look at fixed income investors or what the fixed income market is saying, it's a different story to what equities are looking at.
They are, and I think the problem we've had is a couple of Fridays ago it did feel like we were heading in the right direction, and we'd described it as, you know, 2 steps forward, 1 step back is how the process would go. It feels like we're taking a few steps back at the moment, and it does feel like it's going to be a bit more drawn out than we'd expected. So as you said, it's likely that we're moving, you know, from the ECB's base to sort of more the adverse scenario. Ultimately, that does mean that they're likely to have a hawkish bias. The question is, there's a lot already priced into the markets, and I think we have to, from a fixed income standpoint, look at that and say, OK, maybe we see a couple of hikes from, say, the ECB or the Bank of England. Are they really going to manage to do 3 or 4 consecutive meetings? That's the second half of this year. If this is continuing for a long period of time, we're going to see an impact on growth by that point.
Yeah, sorry, I mean, I guess you could also argue that if AI accelerates and it's kind of deflationary or disinflationary, and then you're in a situation where the war in the Middle East hurts growth and then they actually have to cut, is that possible? I mean, is anything possible at the moment, or is the next move definitely a hike?
I'm not going to go on the air and say something's not possible in this environment. I do think that, you know, AI as a near-term driver, I doubt that is a big disinflationary force in Europe. So I think those inflationary risks really dominate. But as Iain was saying, there is a cost to be paid on the other side, right? This is a supply shock. So it is a trade-off. I do think that the balance of evidence at the moment weighs more heavily on the inflation side. And so therefore central banks worried about inflation anchoring will respond to that, although I suggest ECB and BOE are in different starting positions.
Yeah, and then if you look at the Bank of Japan, I mean, they have a whole other set of issues. We just heard, Iain, from the finance minister warning about possible intervention in the currency market. And I have to say she was, you know, pretty bold about that, saying that the timing for taking bold steps is nearing. The yen fell to the weakest level since mid-2024, again, after the Bank of Japan and the Fed held policy settings stable. But, I mean, do you worry about Japan? We're talking about FX intervention. Well,
I think, as you said, the currency's got very weak. They are effectively an energy importer. They're a food importer. They've got to be concerned about this level. Again, they're a very measured central bank. You know, the reality is they probably should have rates higher than where they have it at the moment, looking at where their inflation profile is, but they don't really want to cause unnecessary market volatility. But if that's the case, then the currency's not going to like it. And as you said, we've seen the depreciation there. So I can understand what they're trying to do. Actually, they should be taking policy higher because it's just too low at the moment.
But how much? I mean, higher oil prices, again, because of the Middle East conflict, have undermined also, you know, the yen because of the reliance on oil. Do we spend enough time really realizing how tricky it is for a lot of these Asian economies?
Yeah, it's a really tough spot, and we've already seen some of the headlines out of Asia and some of the restrictions that are being put on in place there. So it definitely feels like that is being the place that's impacted first. Then it's coming over to Europe, and then ultimately the US does seem to be a little bit more contained. Although you look at where gasoline prices in the US are, it's not completely immune to what's going on at the moment.
So, Sören, do you look at things regionally as well?
Absolutely. I think, you know, as Iain just described, that cadence is exactly right. Starting points are certainly different. I mentioned differences between the UK and Europe, with Europe essentially a target with inflation, the UK well above. US insulated in the first instance, but probably not down the line, and with, I would say, underlying inflation still not under control.
Do we have to talk a bit more about what China's doing in all of this? Because they also have an oil importing problem, but they don't seem to want to weigh in also from a geopolitical standpoint.
If you think about China, China's got huge reserves of oil. So in a sense, they do have something to fall back on. And you're hearing headlines that possibly they're going to release some reserves to help out other parts of Asia. So yes, I think China's actually going to be a big player, and I think ultimately they could become a big player in how this all gets resolved, because in the end they are a big user of oil and they are going to need oil to appear at some point, but they've very strategically built up their reserves over the last few years.
Sören, what are you expecting from the Bank of England today? Again, this is a small open economy. It's extremely impacted by the price of oil. And to start with, there was stickier inflation than elsewhere in Europe.
Absolutely right. For that reason, rates also haven't fallen as much. And I think that's, in a sense, what's bailing out the BOE at the moment. They are still at, I think, what most of the committee would agree, at restrictive rates. So the need to respond immediately is perhaps a bit, or the urgency is perhaps a bit less pressing than elsewhere. So we expect them to be on hold today.
What are you expecting in terms of the vote split? I mean, it's not. I feel like maybe the vote split is a bit like the lottery, but are there going to be more hawks?
I think that the reality is you're probably going to get a couple of dissenters. Hugh Pill looks like the obvious person, and then maybe you get Green, possibly Man. Let's see on that. I think the most important thing for the way we've thought about it is the outcome from the last meeting probably wasn't what the Bank of England were hoping for. I'm sure they knew the direction of travel that the split or the shift in sentiment would have been, but maybe the extent of the move. They've obviously, and Bailey in particular, have spent the best part of the last few weeks trying to soothe that, trying to walk that back a bit. What they probably don't want is another repeat of that. And again, there's a lot priced in to the Bank of England. And again, particularly where the economy is, completely where the labour market is, I think they are going to be looking at the growth side. That said, the data hasn't really helped the Bank of England over the last couple of weeks or so. It hasn't sort of shown that maybe the declines that we've seen in Europe.
But Iain, I mean, you talked about it, right? There was a little bit of an outsized, I guess, market reaction after that March meeting. Why do you think that is? Was it positioning in the markets, or were they looking at world events?
I think there was obviously a change in tone from the Bank of England. I mean, you've got Deputy Governor Ramsden saying he would have cut had this not been going on. I think there were maybe some people who were still expecting a couple of people to possibly even, still have a cut in the books, and that wasn't the case. And then obviously we knew that there was very heavy positioning in the front end of the UK. It was the place where it looked like the employment picture was slowing. It looked like inflation was going to be heading back to target later this year. There was only at the time a couple of cuts priced. People felt they could do more, and actually there was very big positioning because it wasn't going to be a big move, so you actually had to take size in that. Now a lot of that has unwound. I do still feel that there is quite heavy positioning in the front end of the UK, and there has been some re-engagement of that over the last couple of weeks or so.
Right, Sören, how difficult is it to model inflation? So I think we have a viewer question. I had my own question on, if you look at what we're expecting from the Bank of England, certainly Bloomberg Economics thinks we could get some kind of inflation forecast peaking around 3% at the end of the year, and then on the medium term it comes down. And then this viewer, thank you for writing in questions because we love engaging with you. Do you model in Trump possibly putting export controls on oil? I mean, this is all about modeling. This is not about probabilities anymore. It's scenario planning.
Absolutely. And the BOE will very likely follow the example of the ECB, come out with scenarios. I am not so sure they lean very heavily on a baseline scenario and signal a great degree of confidence. Yeah. Like the ECB, they have a strong baseline and then they have scenarios on top of that. I expect the BOE to be a bit more open-minded to the adverse scenarios that they're likely going to show. I suspect they will be more price-driven than really driven by physical supply constraints.
I am getting a lot of questions, again, more questions from viewers on oil. Do you think it's possible, export controls on oil, from the U.S. would be a big deal? Who would suffer most? Asia first and then Europe? So
Asia first. I think in Europe, one of the issues we have, there was, reporting out this morning, the EU Commission is making an effort to ascertain how much reserves do we have in Europe? And the answer is we don't know. We don't have visibility beyond a couple of months. So I think that is really a worrying scenario, and that is, I don't think, one that people are contending with. Like I said, it's treated like a price shock.
Yes, so what the markets aren't really pricing the downside risk, right? They're staying in this kind of optimistic middle ground. Is that fair?
So I think on the growth side, that's definitely fair. Yeah. I think the inflation side is probably well priced, and inflation pricing has moved up to reflect that. But on the growth side, that's where, yes, I see downside risk.
So given all of what we've talked about, what do you buy today in fixed income?
So I think we have seen a big repricing, and I do feel that you're in an environment where the front end of European yield curves are probably overpriced. If you take a sort of an average or a median of what should be occurring over different scenarios, I don't think we're going to get fork hikes coming out of Bank of England or the ECB if this continues. And I think that ultimately we'll focus on growth. So I do think there's an opportunity there. I do still feel that fundamentally corporates are in a really good spot. Now, of course, if we have a global recession, they're going to be challenged on that. But ultimately, if you look at where earnings are in the US, they're very strong at the moment. It's very rare that you actually see earnings get revised up as you sort of go through the quarter. So corporates in a good health. The repricing in yields, I do think it's a good environment to be owning some bonds at the moment, but we do need to be mindful that if this continues, if oil prices continue to go higher, then ultimately yields will go higher in the near term.
Okay, thank you both for joining us. Sören Radde, Head of European Economic Research at Point72, and Iain Stealey, International Chief Investment Officer for Fixed Income at JPMorgan Asset Management. Now, coming up, we'll talk to Nive Bhagat, Capgemini Chief Financial Officer, about the IT company's latest sales numbers and challenges of conflict and AI. That's coming up next, and this is Bloomberg.
The Bank of England makes its next interest rate decision against the backdrop of conflict in the Middle East. Investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Our next decision is at the end of April. A lot will have happened.
Tune into Bloomberg for live market reaction and analysis from the studio and on the ground at the Bank of England. It all starts today at noon on Bloomberg. Context changes everything.
Well, despite economic uncertainty and the impact of AI and the IT industry, Capgemini's first quarter sales outperformed analyst expectations, particularly in North America and Asia. Well, Nive Bhagat, Capgemini's Chief Financial Officer, joins us now. Ms. Bhagat, thank you for being with us. When you look at geopolitical uncertainties and everything that we're actually living through with what's happening in the Middle East, are rising tensions actually driving spending in security services?
Well, we've had, of course, as you saw, Francine, a very good quarter. And of course, yes, the momentum came from a number of different geographies. We haven't necessarily seen any particular impact at this stage from the Middle East because it has not really impacted the group revenues. But as you can imagine, we are watching that very carefully and being very vigilant. But is there more spending in the area of security and defense? I'd say yes, and that happens particularly in Europe, where we're seeing quite a bit of it. And we're, of course, very well positioned to take that, considering, of course, we have a European heritage. We have a lot of scale and digital solutions to be able to do that.
So what does it mean for companies right now? Are they cautious about launching either something transformative or some of the innovative projects with you, or do they keep on spending and accelerate? What do you think is going through their minds right now?
Well, they are looking at a combination of things. So they're looking at both the cost takeout sort of initiatives, and they're also looking at transformation initiatives. And particularly when you look at AI, since that's the topic in everybody's conversation, they're looking at it from the perspective of, should they be looking at things which are beyond just cost efficiencies to business outcomes? And therefore, should they be preparing, if you like, their entire tech stack to be prepared for that? So should they be working on their processes, on data, to be able to architect all of that better to be able to prepare for it? So there is a mix of both. There is the cost takeout to be able to fund the transformations, and there is the start of transformations as well.
So what kind of transformations? Is there, if you look at the market, what's the most dynamic part of the market for you right now?
So there's a lot of spend on a few areas. So there's data, there's AI, and as I said, there's a lot of spend on defense as well, and there's spend on digital core. So let me explain this. So when you look at wanting to get into AI in a way that will really impact business outcomes, it's very important for clients to look at their tech stack, which has really not been touched for a very long time. So there's a lot of tech debt sitting there. So clients are looking at what can they do about processes? How do they hyper-automate these processes? How could people like us, for example, take them over, and automate them, them right down to the micro task level and give them insights which will then help them make the business decisions in times like this, for example. It's also about how do they re-architect their data, because a lot of this data is old, hasn't been cleaned, etc. So what do you do with this data? And they're looking at that very carefully. So we see the transformation there as well. And there's a lot of back-end systems, if you like, on the digital core side of things, which they need to sort of reimagine, re-architect for them to be able to get the right insights. Because it's only then can you start to put the true agentic AI, if you like, as a harness across the organization. And from that perspective, therefore, there's a lot of, preparing readiness to be able to sort of seize, if you like, business outcomes as they go forward.
Because you're a big global company, by geography, is there, part of the world that feels like they're ready to spend more or are embracing AI more? Is it, the US, Asia, or Europe, or anywhere else?
Well, I'd like to say the Anglo-Saxon world is spending a little more on the AI than the rest. Not to say that the rest is not looking at it, but there are various stages to this. There are clients who are in the proof of concept stage. There are clients who are doing sort of AI factories, and there are clients who are looking at sort of what I call the real AI use cases that are going to impact business outcomes. You see a bit more of the last category across the Anglo-Saxon world, and you tend to see sort of the first two categories maybe outside of that in continental Europe and other parts of the world as well.
And going back to AI, I mean, you're saying that customers are they fully in AI, or are they waiting also for the next iterations? Do you think their CapEx is invest now and then think later, or are they going a little bit more slowly and so CapEx can increase in 12, 24 months?
Well, it's a combination, because, as I said, a lot of them are realizing that the real benefit of AI is in AI transformation, in true business outcomes and business cases. And in that context, they're preparing themselves for, that leap ahead. Some industries, of course, making that leap faster than some other industries in terms of what needs to happen. But everywhere we see clients now having conversations about how you prepare that tech stack, if you like, for the, for agents and agentic harness around that tech stack to be able to make that happen. So you're seeing quite a bit of that preparedness and getting ready for the, for what I call the big AI use cases, which then impact business outcomes in a client's business going forward, or essentially a game-changing aspect in their own industries.
Okay. I know Capgemini was also criticized a couple of months ago because of contracts that you had with ICE in the U.S. Where are you in the process of divesting that unit?
So, as you know, we put that company up for sale, and we wait for the process to conclude. So we've got, of course, expressions of interest, and we wait for the sale to go through.
Okay, thank you so much for the update, and thank you so much, as always, for coming on Bloomberg TV. That was Nive Bhagat, Capgemini Chief Financial Officer. Again, a lot going on in the market today. The main focus is, of course, on oil, given everything that we've seen in the last 12 hours. Oil hitting a 4-year high. There are reports that the U.S. is mulling options in Iran, military options. Now, again, the U.S. and Iran have maintained their blockade of the Strait of Hormuz, with the conflict in the Middle East called the biggest supply shock in history by the International Energy Agency. Coming up, we talk more about oil, and of course, we'll have the latest on the Strait of Hormuz blockade. That's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Oil rallies to a wartime high after a report that President Trump is set to receive a briefing on new military options in Iran. A frenzy of big tech earnings. Alphabet jumps as Google delivers a clear payoff from its AI spending, but Meta tumbles on plans to increase CapEx up to $145 billion this year. Plus, the Fed holds rates in a split vote as Kevin Warsh moves closer to becoming the next chair. We're also expecting no change from the Bank of England and the ECB later today. So oil has spiked to a wartime high on reports that the U.S. is considering new military options to attack Iran, with Brent briefly surging past $126 a barrel. Well, earlier, President Trump told Axios that he will not lift a naval blockade on Iranian ports until he secures a deal on Tehran's nuclear program. Let's get more with Bloomberg's Jumana Bersechi in Dubai. Jumana, good morning. So what do we know about these potential new U.S. plans?
Yeah, well, Francine, what's become apparent in the last 24 hours is that President Trump has no intention of lifting the U.S. naval blockade. And actually, in an interview with Axios yesterday, he said that the blockade was more successful than bombing. And this, again, complemented by U.S. Central Command earlier this morning, saying that they had caused 41 commercial vessels to turn around on the back of this blockade. So remember, at the beginning of the week, there was perhaps some hope that there would be a Straits reopening. It's become apparent that that is not going to happen. And indeed, Axios also reporting overnight that later today, the head of the Central Command, this is Admiral Cooper, will be having a meeting with President Trump whereby he's going to present to him 3 potential military options. And according to this Axios report, those 3 options include short and powerful strikes on infrastructure targets, taking over part of the Strait of Hormuz to reopen it for commercial shipping. And then the third option would be a special forces operation on the ground in Iran, whereby troops would be deployed to go and extract that highly enriched uranium. Now, we don't know whether the U.S. is going to go down the military route, but of course it is within the realm of possibilities. But just to add to that as well, Francine, the U.S. Central Command have also requested for the first time ever for the Army to send this Dark Eagle hypersonic missile. This is a super missile 5 times faster than the speed of sound that has never been deployed in the region. And the rationale would be it would be used to target some of those ballistic missile launchers deeply embedded in the mountains of Iran, not used before, but just another sign that the U.S. are increasing their military assets in the region should they want to go down the path of hostilities once again.
Jumana, what's been the Iranian response?
Well, defiance, as ever. And overnight, one of the key military advisors to the supreme leader said that as long as the U.S. naval blockade persists, then they will have to respond somehow. Unclear what that type of response would entail. And then the Speaker of the Parliament, Mohammad Ghalimov, who was also the key negotiator from the Iranian side, has said that Trump is trying to force them to surrender through a combination of factors. 1, economic pressure, and 2, presenting the Iranian side as being internally divided. And actually, I would say that President Trump would probably agree with that, because he does think and there is a view out there that the U.S. naval blockade is working. It is actually sustaining a lot of damage to the Iranian economy because they're not capable of physically exporting their oil out of the country, or at least if they are doing so, it's in a diminished capacity. And at the same time, it is unclear from even our own reporting who is actually calling the shots right now in Iran. President Trump has described leadership as being fragmented, coming under pressure. He's saying that they can't get their act together and very close to a state of collapse. So time will tell whether that actually is the case on the ground. But once again, the messaging coming through from Iran is one of defiance as opposed to capitulation. And so what you're seeing today in markets is accounting for the fact that as we head into a weekend, and this tends to happen over the course of the weekend, there could be once again a resumption of military action.
Jumana, thank you so much. We'll, of course, keep on top of this. Jumana Bersachi there in Dubai. Now, Spanish GDP was higher than expected in the first quarter, but the country's inflation has unexpectedly jumped further beyond the ECB's 2% target. Carlos Cuerpo, the Spanish economy and deputy prime minister, says the country is more resilient to higher fossil fuel prices because of its bet on renewables. But he also warned that as the Iran war drags on, it may start impacting the tourism sector heading into peak holiday season. Well, I spoke exclusively to him on the sidelines of Bloomberg's City Lab event in Madrid.
Since the very beginning of the war, we've been very attentive to the first line of impact, which was energy prices, fertilizers as well. And 20 days after the war started, on the 20th of March, we already had a pack of measures in place, 5 billion to help households, firms, energy-intensive sectors deal with the increase in prices, and also the agricultural sector, because these 2 months are key for the next season crop. So we knew that we had to help them with fertilizers as well. And this is helping us navigate through these initial phase of the war. For example, today we had the data on inflation for April, which was 3.2 for Spain. Basically, we've made the estimation, what it would have been without our measures in place, 4.4. So that's by how much our measures are helping households and firms in our country. But in any case, big question mark is, of course, the duration. And that's what's keeping us, also, of course, very worried, because it's not just about prices, but potential additional issues, like, for example, jet fuel, which for Spain is a key element for our tourism sector. So we don't have a specific issue in Spain because we have 8 refineries. We only import 20% of our jet fuel. But tourists will come from other countries with other companies, so we need to deal with this with a coordinated approach.
But how do you see, first of all, the war with Iran ending? Spain has taken a very different stance to other countries in Europe and in the world.
Well, you know, since the very beginning, we've had a very clear position against this illegal war in Iran that was started unilaterally. And what we're demanding at this point is to put an end to it and do it via diplomatic channels, as we hope will be the case with the conversations that are ongoing. Although let's see in the next few days, in the next few weeks, whether this is the case or not. In any case, even in the best case scenario of putting an end to it right now, it will take months for the situation to go back to normal.
Carlos Cuerpo there, the Spanish economy and Deputy Prime Minister of Spain. Now, major French banks have been reporting this morning. It was a beat from BNP Paribas and Société Générale, but a miss from Crédit Agricole. Now, the CFOs of BNP and Crédit Agricole told Bloomberg that they've increased provisions in the first quarter to combat macro uncertainty.
So it's possible that there's going to be a couple of rate hikes. It could be that is because there is inflation, so GDP growth could shrink a bit. But GDP overall would remain, in our view, would remain positive, yeah? But there is this uncertainty, and we haven't seen it with our clients. We haven't seen it in the results. Nevertheless, we took a macroeconomic provision in the cost of risk in anticipation if the situation could be continued.
Our corporate loan production is growing strongly in France. In Italy, you know, Italy is our second domestic market. Corporate loan production increase was multiplied by 2 quarter on quarter. So we do have today a resilience of our SME corporate customers. However, it's true that we can see in our customers a form of uncertainty that they're waiting to see what's going to happen in terms of the macroeconomy worldwide.
Well, let's get straight to our EMEA finance team leader, Tom Metcalf, who's here with me. Tom, always great to speak to you because we can have a full roundup of some of the European banks. Look, Crédit Agricole first. How big of a miss was it?
Yeah, there's certainly, of all the banks reported today, looks like, you know, their shares are taking the biggest beating. And I think that's probably reflecting that while a lot of banks are maybe warning about macro uncertainty, at least in the numbers of Crédit Agricole, you're seeing a little bit of softness in the lending. And, you know, frankly, in this kind of market, if you're missing your estimates, then, you know, you're going to get punished.
So, you know, if you look at BNP Paribas and Soc Gen, they were a little bit more optimistic.
Yeah, broadly speaking, you can, you know, make a case, hey, well, equities trading really strong across those, both those banks. And then BNP is interesting. It seems like the narrative there has been driven by what we just heard from the CFO about, you know, this idea there is macro uncertainty. We're just being very protective. But again, I think people are very sensitive to that, rightly so. And it's interesting to me that BNP Paribas, at least for me, is probably the most high-profile statement of that kind of outlook among some lenders.
Tom, what about Standard Chartered? So actually, you know, profits hit a record and they tried to downplay some of the risks in the Middle East.
Yeah, you can say it's a good set of results for them. I'm sure Bill Winter's pretty happy with how the market's reacted. You know, the biggest thing there, I look at those wealth inflows. That really does sort of seem to suggest that, you know, that push into that business unit is paying off. It's doing well. Of course, like all lenders, they're faced by this, you know, extraordinary geopolitical backdrop. But a bit like UBS, which also obviously has a huge wealth business, it seems that maybe that kind of footprint is better placed or even benefiting from the kind of volatility we're seeing, perhaps with clients looking for sort of, you know, stable places to stash their money.
So is there a danger that actually shareholders expect, you know, this to me feels like a delicate moment for a lot of the banks because of AI, and you don't really know if their business model holds, and they just need to spend more, I guess, on AI, whether internally or they go through another service. But at the same time, are shareholders expecting them to give back in terms of dividends or share buybacks?
Yeah, it's tricky. You look at how much, you know, these firms need to be spending spending on CapEx, everyone investing in AI. And the question is, what's largely drove their share prices, over the last couple of years was this big share buyback program. Obviously, they're not going to pull back on that, but is there any more kind of juice to squeeze from that? And then, of course, it comes, you see these provisions rise, and does that again take away a bit of that sort of capacity to sort of continue to reward shareholders on that front?
Broadly speaking, I mean, the impact, of course, from the conflict in the Middle East, one could be on, households and therefore lending and maybe non-performing loans or something like that, and then trading. Because if you're on the bad side of trading, then it's going to be a problem. Yeah,
exactly. I think whatever your bank footprint is, so in the UK we've got something like a Lloyds or a NatWest, which is very UK-centric. It doesn't matter. Everyone is exposed to Iran because it's going to hit the whole global economy until there's a clear resolution, and there's going to be a lag, right? You're not seeing it in the first quarter, but I wouldn't be surprised if come second quarter you start to see a few more pain points. And then, trading, and that is the hardest thing to do in banking, right? Like, make sure you're on the right side of these things, and if you are, suddenly that investment bank, that trading unit is a positive, but when you're on the downside, shareholders really punish you for that.
Tom, thank you so much. As ever, Tom Metcalf there in charge of finance for Europe. Now, coming up, the Mayor of Manchester tells us why he's not ruling out a return to the UK Parliament. Our exclusive interview with Andy Burnham is next, and this is Bloomberg.
Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets.
So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair.
Well, that was the Fed Chair, Jay Powell, on staying on as governor when his term ends next month. Now, Japan's top currency official is saying this is my final warning before action. Now, Japan's finance minister is saying they are nearing the time to take bold action on FX. We broke that story at the beginning, of course, of the show. The yen extending some of the losses, dropping some 0.5% to 159.61, and that's a day low. Now, the mayor of Greater Manchester has warned that next week's local elections will be a challenging test for the Prime Minister, Keir Starmer. In an exclusive interview, Andy Burnham, widely tipped as a future successor to the Prime Minister, is calling for a radical change in strategy to restore faith in a fractured political system, as Labour faces a double-edged squeeze from both the left and the right.
Well, they both present a challenge, and that's a different challenge in different parts of the country. So Reform stronger in some places, Green Party stronger elsewhere. I'm honest in saying I think we've got to recognise that politics has changed. The two-party system, I think, is no more, and we've got to start thinking differently about politics. But it's why I've said what we've pioneered in Greater Manchester needs to be what goes national, more collaborative, more place first, not party first, long term, not short term, problem solving, not point scoring. The UK needs a lot of change in politics at the national level.
What does that mean economically? Do you get rid of do you spend more fiscally? Do you get rid of some of the budget rules?
Well, I think a new politics lays the ground for a new economy, because I think there's long-term work to be done. We need a 10-year approach to repairing public housing, transport, energy, crucially. That affects individual households, but businesses as well. The cost of energy in the UK is far too high. So a 10-year reform programme there. 10-year reform of the care and health system as well. That's what I think the UK needs. And I think it's better done on a collaborative basis so that Britain is more of an investable proposition, We need to get rid of the turbulence from our politics, because that then doesn't give the markets confidence to invest. And I think we change politics to change the country.
But do you think the budget rules currently are too restrictive?
Well, there's certainly a case when we look at the pressure on defence spending to consider that exceptionally outside of the rules. But the rules are there for a very important purpose, to give confidence to investors. And obviously the rules will stay in any context. But the world is changing. We all have to accept the need to spend more on security, resilience and defence. And the rules can't stand in the way of that.
Will you try and run for Parliament again this year?
Well, I've tried once this year, and it didn't go so well, or didn't go as I wanted. I actually love my job as the Mayor of Greater Manchester, and I'm kind of really glad to be back here at City Lab because, Michael Bloomberg introduced myself and the Mayor of Liverpool to this network when we left the UK Parliament, and it's really kind of taught us that this is actually the future. But actually, I do think, as I've said in this interview, the politics we've pioneered as mayors, place first, not party first, that needs to go national. And so we do need to reform Westminster. So I'm not going to... I can't remove the kind of feeling that someday I will try and go back.
So you're not ruling it out?
Not ruling it out.
Well, that was the Mayor of Greater Manchester, Andy Burnham. Now, the Bank of England and the European Central Bank are expected to keep rates on hold today. Policymakers playing for time as they assess the economic impact of the war in the Middle East. Now, joining us now is Bloomberg Daybreak anchor Lizzie Burden, and from the ECB in Frankfurt is our Chief Europe correspondent Oliver Crook. So, Ollie, let's start with you. What's the data telling ECB policymakers?
Yeah, so the important thing here for the ECB policymakers is that they set up basically three broad scenarios under which the war in Iran is going to impact the outlook for inflation and also for growth in a number of different sort of areas. There's the baseline, the adverse, and the severe scenarios, the sort of the good, the bad, and the ugly. The good is inflation peaking just over 3%. The kind of middle one is just over 4%, and the bad scenario is over 6%. Now we've been getting GDP data, we'll be getting inflation data over the last couple of days from a number of European nations. Overall, the picture has been pretty clear. Inflation is rising, currently segregated just to the energy sector, which is sort of encouraging news for the ECB. But I think what they're very, very concerned about is some of the things we've been seeing out of, say, France, for example, where you see the dynamic in France, which has been very clearly a stagflationary situation, where GDP came in 20 basis points under the expectation, coming in dead flat, whereas inflation came at 2.5%, well above the sort of 20 basis points above the expectation. So that is the kind of dynamic that is really going to worry the ECB. And for the ECB today, and the governing council is to try to express to people what kind of inflation they're expecting within the Eurozone and where they are on that spectrum of that scenario from the good, the bad, and the ugly. I think right now we're sort of centered around the bad, but we'll hear from Christine Lagarde in a little while.
Ollie, what can we expect from Lagarde's press conference after today's decision?
Yeah, exactly. So what we're going to be pressing her is the kind of the nature of this inflation. If it is inflation that is sort of segregated into the world of sort of just the energy sector, potentially the ECB can kind of look through that level of inflation for a little bit of period of time. If they start to get the indication that this is reading through to other things, let's say to services, let's say to wages, let's say to food prices, that is something that is going to severely concern the ECB. And the other question for them is the duration. How long is this going to last? And for the European Central Bank, like so many policymakers in the European Union, you're in this situation where you're basically in the driver's seat of a car that you're not controlling. It is being driven right now by Donald Trump. There is no clarity at all on when this energy crisis will end, and it's sort of happening in real time, where you wake up this morning on the day of an ECB rate decision, oil hits $126 a barrel. It's going to be very difficult for the European Union, for the European Central Bank, to give an assessment. I think it'd be a very difficult press conference for Christine Lagarde. I think they know all of the questions that they're going to get later from journalists. I don't know that they have the answers.
Yeah, that's probably right. Lizzie, what should investors be looking for in the BOE's guidance and MPC vote split?
Well, as you suggest, it's not the decision itself that's going to be the exciting part today, Francine. A hold expected, just like at the ECB, only a 10% chance of a hike priced into markets at this point, because it's the same dilemma faced here as in the Eurozone. You've got high inflation, but also subdued economic growth. And that same question, are there going to be second-round effects from the energy price shock? That is what is worrying the chief economist, Hugh Pill. He's likely to be the dissenter in an 8-1 vote split, which is what economists expect we'll get today. Others on the committee are hoping that the weakness in the labour market, excuse the road noise here, will be able to control that feedback loop when it comes to prices. But do watch out for other potential dissenters. Could be Claire Lombardelli, one of the deputy governors, external members, Catherine Mann and Megan Green. And if there are dissenters to the hawkish side, they're likely to really emphasise the adverse scenarios in this first set of forecasts that we get today from the Bank of England since the war started.
And Lizzie, under what conditions would the Bank of England hike rates, and how close are we to that threshold?
Well, it's if we get evidence of those second-round effects. And if you look at the latest Bank of England survey data, they actually suggest that you're not seeing that energy price shock fueling wage demands just yet. So most of the MPC likely to want to wait for more evidence to be gathered. At the moment, traders are pricing in 3 hikes before the end of the year. They see them in June, July or September and November. But we'll listen to the governor in his press conference today. How much uncertainty does he want to emphasise around these scenarios? Remember, at the last meeting, well, in March, you had them seeing quite a sharp market reaction in response. Do they stick to that guidance that they stand ready to act? Do they give more hawkish hints on top of that?
Lizzie, thank you so much, Lizzie and Ollie there. Lizzie Burden in London, Oliver Crook in Frankfurt. Now, we'll have, of course, a special coverage of the BOE decision and Governor Andrew Bailey's press conference. That's at midday UK time. A little bit later, we'll also be speaking with Governor Bailey, so you can catch that interview from 4 p.m. Plus, the ECB rate decision, that's at 1:15 p.m. London time, followed by President Lagarde's news conference at 1:45. Now, we also have had a frenzy of big tech earnings, some key takeaways. Alphabet seeing a clear payoff from its AI spending, while Meta is lagging behind. A couple of other things we're watching out for. Look, pre-market, you can see Amazon is gaining, as is Alphabet. We're seeing a bit of pressure on Meta, down 7.8%, and then Microsoft down 1.8%. Also pre-market. Now, the other big story is definitely Japan. Now, Japan's finance minister has warned about possible intervention in the currency market, saying the timing for taking bold steps is now nearing. So again, the finance minister definitely not mincing her words. The yen jumped after Katayama spoke, trading as strong as 159.81, and that is near a level where authorities intervened in support of Japan's currency on several occasions back in 2024. Again, Katayama saying that ministry officials will be monitoring the currency market even when much of Japan shuts for the prolonged Golden Week holidays that stretch through Wednesday next week, during a period when trading volumes in the markets are expected to be a little bit thin. The other big story, of course, is what's happening with the oil market. Now, Brent oil rallying to a 4-year high after Axios reported that the U.S. President Donald Trump will receive a briefing on new military options for actions in Iran. Again, the U.S. and Iran have actually maintained their blockade of the Strait of Hormuz, with the conflict in the Middle East called the biggest supply shock in history by the International Energy Agency. So, plenty more to come on Bloomberg. Up next, it's Bloomberg Brief with Vonnie Quing, and this is Bloomberg.